Nobody expected this headline to appear. Canada has just made a major move involving one of the world's most important strategic metals, and investors across global markets are paying very close attention. While many people continue focusing on interest rates, inflation, and the Federal Reserve, another story has quietly emerged that could have significant implications for the future of silver. Some analysts believe this decision could strengthen North America's position in the global supply chain, while others believe it may trigger a completely new chapter for precious metals investors. The biggest question now is simple. Why did Canada make this move, and why did so many people fail to see it coming? Stay with me because the answer may completely change how you look at the future of silver. Silver has become one of the most valuable strategic resources in the modern global economy. It is no longer viewed only as a precious metal sitting inside vaults or investment portfolios. Today, silver powers some of the fastest-growing industries in the world. Every year, manufacturers require larger amounts of silver to build advanced technology, renewable energy systems, electric vehicles, medical equipment, and artificial intelligence infrastructure. As demand continues growing, governments are beginning to recognize that securing reliable supplies has become an economic priority. Canada has always played an important role in the global mining industry. The country is known for political stability, modern infrastructure, advanced mining technology, and large natural resource reserves. Investors often view Canadian mining projects as some of the safest long-term investments because the country offers a predictable legal system, experienced mining companies, and strong financial markets. That is why this latest development has attracted so much attention. Markets immediately began asking whether Canada is positioning itself for a future where critical minerals become just as important as oil, natural gas, and other strategic resources. The timing is especially interesting. Around the world, governments continue investing billions of dollars into domestic manufacturing, renewable energy, semiconductor production, and artificial intelligence infrastructure. Every one of these industries requires reliable access to silver. Solar panels continue breaking installation records. Electric vehicle production continues expanding across North America, Europe, and Asia. Artificial intelligence data centers require advanced processors, power systems, and networking equipment that depend on silver because of its unmatched electrical conductivity. Medical technology also continues evolving with increasing demand for precision electronics and specialized equipment that rely on silver. Unlike many industrial metals, silver performs functions that remain extremely difficult to replace. Engineers continue searching for alternatives, but silver still offers exceptional conductivity, durability, and reliability that few materials can match. This growing dependence creates an interesting challenge. Demand continues, increasing, while mining supply cannot rapidly expand. Opening a new silver mine requires years of geological exploration, environmental studies, government approvals, financing, construction, and workforce development. Even after receiving approval, commercial production often takes several more years. That means decisions made today may not influence actual production until much later. Investors understand this reality very well. Markets therefore react not only to current production numbers, but also to future expectations. Whenever governments announce policies supporting domestic mining, strategic resource development, or supply chain security, investors immediately begin evaluating long-term implications. This appears to be exactly what is happening now. Another important factor involves global competition. Countries around the world increasingly recognize that critical minerals represent both economic opportunity and national security. Recent supply chain disruptions demonstrated how vulnerable modern manufacturing becomes when access to essential materials is interrupted. As a result, governments have accelerated efforts to strengthen domestic production, diversify suppliers, and reduce dependence on overseas sources. Canada finds itself in an excellent position because it possesses significant mineral resources, experienced mining companies, skilled labor, and close economic relationships with major industrial economies. That combination creates opportunities extending far beyond traditional mining. It supports manufacturing investment, technological innovation, infrastructure development, and long-term economic growth. Silver investors naturally pay attention because stronger mining investment today may influence future production tomorrow. However, the story does not end there. The global silver market depends on much more than mining alone. Investment demand continues playing an increasingly important role. Periods of economic uncertainty often encourage investors to purchase physical, precious metals as long-term stores of value. Inflation remains an important concern despite easing from previous highs. Many households continue experiencing elevated living costs, while businesses face higher operating expenses. Whenever purchasing power becomes uncertain, investors frequently begin looking for assets capable of protecting wealth over longer periods. Gold traditionally receives most of the attention. Silver often follows because it combines investment demand with expanding industrial consumption. That combination makes silver unique. If economic uncertainty increases, investment demand may strengthen. If global manufacturing expands, industrial demand may also strengthen. When both forces operate together, silver can experience powerful price movements. The Federal Reserve remains another major influence. Every inflation report, employment release, manufacturing survey, and policy statement shapes expectations regarding future interest rates. Higher interest rates generally strengthen the U.S. dollar while creating temporary pressure on precious metals. Lower interest rate expectations often provide additional support. Markets constantly attempt to anticipate these changes rather than waiting for official decisions. That explains why silver prices sometimes move sharply following economic reports even before central bank meetings occur. The U.S. dollar also deserves close attention. Because precious metals trade internationally, currency fluctuations influence global demand. A stronger dollar can reduce purchasing power for international buyers. A weaker dollar often improves affordability while encouraging additional demand across overseas markets. Professional investors therefore monitor currencies just as carefully as mining production and industrial consumption. Another powerful trend continues developing quietly beneath the surface. Central banks around the world continue adding gold to national reserves at historically strong levels. Although central banks rarely purchase silver directly, their confidence in precious metals reinforces broader investor interest throughout the entire sector. Private investors frequently increase exposure to both gold and silver during periods when financial uncertainty remains elevated. History offers another valuable lesson. Major silver bull markets rarely begin because of one single headline. Instead, they develop gradually as multiple supportive factors begin working together. Industrial demand strengthens. Mining supply becomes tighter. Investment demand increases. Monetary policy expectations shift. Inflation remains persistent. Currency markets evolve. Then confidence slowly builds across the market. Eventually, prices begin reflecting these changing fundamentals. Many experienced investors believe successful long-term investing depends on recognizing these trends before they become obvious to everyone else. That is why Canada's latest move has generated so much discussion. Whether it ultimately proves to be a turning point or simply another important development remains uncertain. But it clearly demonstrates that governments increasingly recognize the strategic importance of securing critical mineral supplies for future economic growth. Silver now stands at the center of some of the world's most important technological transformations: renewable energy, artificial intelligence, electric vehicles, semiconductor manufacturing, advanced defense systems, medical innovation, modern communications. Every one of these industries depends on reliable access to silver. That reality continues supporting long-term demand even while markets experience short-term volatility. The coming months may reveal whether Canada's latest decision becomes one of the most important developments for the silver market in recent years, or simply another step in a much larger global race to secure the critical resources that will power the economy of the future. As investors continue examining Canada's latest decision, another important question is beginning to dominate conversations across financial markets. Could this become the catalyst that finally shifts the balance between global silver supply and rapidly growing demand? The answer depends on several powerful forces that are all moving at the same time. First, there is industrial demand. Unlike many commodities, silver is consumed across dozens of industries every single day. Once silver is used inside electronics, solar panels, medical devices, and industrial equipment, much of it becomes difficult or expensive to recover. That means manufacturers must continuously purchase new supplies to keep production moving. Solar energy remains one of the fastest growing sectors in the world. Governments continue investing billions of dollars into renewable energy projects as they work toward long-term energy security and lower emissions. Every new solar installation requires significant amounts of silver because no other metal matches its electrical performance at the same level. The International Energy Agency continues forecasting strong renewable energy expansion over the coming years. As more countries increase solar capacity, silver demand naturally follows. Electric vehicles represent another major source of consumption. Every electric vehicle contains more silver than many traditional gasoline-powered vehicles because advanced electrical systems require highly conductive materials. Charging stations, battery management systems, onboard computers, safety systems, and electronic controls all contribute to growing silver usage. Automobile manufacturers continue investing enormous amounts of capital into future production facilities. That investment supports long-term demand, regardless of temporary fluctuations in vehicle sales. Artificial intelligence is creating another unexpected source of silver demand. Massive AI data centers require advanced processors, high-speed networking equipment, sophisticated cooling systems, and reliable electrical infrastructure. Every one of these technologies depends on components containing silver. As technology companies race to build larger computing facilities, silver quietly becomes one of the hidden materials supporting the AI revolution. Semiconductor manufacturing follows a similar trend. Governments across North America, Europe, and Asia continue investing heavily in domestic chip production. New fabrication plants require years to construct and billions of dollars in funding. Once operational, these facilities consume significant quantities of precious metals, including silver, throughout manufacturing processes. At the same time, global mining faces increasing challenges. Mining companies continue dealing with higher labor costs, energy prices, environmental regulations, financing expenses, and infrastructure investments. Developing new projects has become both more expensive and more time-consuming. Even when silver prices rise, companies cannot immediately increase production. Supply responds slowly, while demand often changes much faster. This creates one of the most important characteristics of the silver market. Whenever demand grows faster than supply, markets eventually begin adjusting prices to restore balance. History has demonstrated this relationship many times. Previous silver rallies often developed after extended periods when demand quietly strengthened while supply struggled to keep pace. Initially, few investors noticed the imbalance. Then, inventories gradually tightened. Finally, prices accelerated as the market recognized changing fundamentals. Many analysts wonder whether today's environment shares some of those characteristics. Another important consideration involves physical investment demand. During periods of economic uncertainty, many investors prefer owning physical assets rather than relying entirely on financial instruments. Silver coins and bullion frequently experience stronger demand whenever inflation remains elevated, financial markets become volatile, or geopolitical tensions increase. Dealers occasionally report higher premiums during periods of increased buying activity, especially when retail investors become more active. Institutional investors also continue monitoring precious metals as portfolio diversification tools. Although large investment funds frequently focus on gold-silver, often attracts additional attention once broader precious metals momentum begins developing. Historically, silver has sometimes outperformed gold during later stages of major precious metals rallies because its smaller market allows price movements to become more dramatic. The Federal Reserve continues influencing this entire landscape. Every employment report, inflation reading, manufacturing survey, consumer spending update, and central bank speech has the potential to reshape interest rate expectations. Markets constantly attempt to estimate future monetary policy. If inflation proves more persistent, policymakers may maintain higher rates for longer. If economic growth weakens, expectations could gradually shift toward future easing. Silver responds not only to actual policy decisions, but also to changing expectations long before official announcements occur. Currency markets remain equally important. The US dollar influences nearly every globally traded commodity. When the dollar strengthens, precious metals often experience temporary headwinds. When the dollar weakens, international demand frequently improves because metals become more affordable for buyers using other currencies. Professional investors therefore monitor exchange rates alongside inflation, data, interest rates, manufacturing activity, and mining production. Geopolitical developments also remain impossible to ignore. Global trade routes, energy markets, international diplomacy, and regional conflicts all influence commodity markets in different ways. Mining operations depend upon stable transportation, reliable electricity, skilled workers, and secure investment environments. Any disruption affecting these conditions can increase production costs while creating additional uncertainty. Canada's latest move demonstrates how governments increasingly view critical minerals as strategic national assets rather than ordinary commodities. Countries now compete not only for manufacturing leadership, but also for secure access to the raw materials supporting future economic growth. Silver sits near the center of this transformation. That is why investors continue watching every major announcement involving mining policy, industrial investment, infrastructure development, and global supply chains. No single event determines the future of silver. Instead, markets evaluate how multiple long-term trends continue evolving together. Canada's decision has simply added another important piece to an already fascinating puzzle. And if history provides any guidance, the biggest moves in silver rarely begin after everyone agrees they are coming. They usually begin while uncertainty still dominates the headlines and before the broader investing public fully recognizes what is changing beneath the surface. The coming months may prove to be one of the most important periods for the silver market in recent years. Investors are no longer watching only inflation or interest rates. They are also following supply chains, government policy, industrial demand, and strategic resource development with far greater attention than ever before. Canada's latest move has reminded the market that access to critical minerals is becoming an economic advantage rather than simply a business opportunity. This trend extends far beyond one country. Around the world, governments are introducing new mining strategies, supporting domestic production, encouraging investment, and strengthening supply chain security. These decisions may not produce immediate headlines every week, but over time they have the potential to reshape global commodity markets. Silver sits directly at the center of this transformation. Unlike many raw materials, silver serves two powerful purposes at the same time. It protects wealth during periods of financial uncertainty. It also supports the technologies driving the future global economy. Very few assets possess both characteristics simultaneously. That unique position helps explain why so many experienced investors continue watching silver despite periods of short-term volatility. Another factor worth considering is investor psychology. Financial markets often move ahead of economic reality. Prices rarely wait until every positive development becomes obvious. Instead, markets attempt to anticipate future conditions months before they actually appear. This explains why silver sometimes rises even when current headlines appear negative. It also explains why prices occasionally decline despite strong long-term fundamentals. Markets constantly price future expectations rather than present conditions alone. Long-term investors understand this difference. They focus less on daily price fluctuations and more on structural trends that unfold over several years. Industrial demand continues expanding. Renewable energy investment continues increasing. Artificial intelligence infrastructure continues growing. Semiconductor production continues receiving government support. Electric vehicle manufacturing continues expanding across multiple regions. These trends remain intact, regardless of short-term market volatility. Mining supply, meanwhile, continues facing challenges. Higher operating costs, stricter environmental regulations, labor shortages, financing requirements, and longer development timelines all reduce the industry's ability to rapidly increase production. This creates an environment where future supply growth may struggle to match future demand growth. No one can predict exactly when markets will fully recognize that imbalance. But history suggests these adjustments rarely happen gradually forever. Eventually, prices begin responding as investors recognize changing fundamentals. Inflation remains another important consideration. Although price growth has slowed compared with previous peaks, households and businesses continue dealing with higher costs than only a few years ago. Purchasing power remains an ongoing concern for many investors. That continues supporting interest in tangible assets, including precious metals. The Federal Reserve also remains one of the largest influences on financial markets. Every speech, economic report, and policy meeting shapes expectations regarding future interest rates. Markets continue reacting quickly because investors understand monetary policy influences currencies, borrowing costs, investment flows, and overall economic confidence. If inflation continues easing while economic growth slows, expectations for future rate reductions could gradually strengthen. Historically, precious metals have often benefited when monetary policy becomes more supportive. Of course, nothing in financial markets is guaranteed. Unexpected economic strength could delay policy changes. Inflation could remain stubborn. Global growth could slow more rapidly than expected. Geopolitical developments could introduce new uncertainties. Every one of these possibilities influences precious metals differently. That is why diversification, careful research, and long-term thinking remain essential. Professional investors rarely build investment decisions around one headline. Instead, they evaluate hundreds of data points while remaining flexible as new information becomes available. Canada's latest move should therefore be viewed as one important piece within a much larger global story. It reflects growing recognition that critical minerals represent strategic national assets. It highlights increasing competition for future industrial leadership. It reinforces the importance of reliable supply chains. And it reminds investors that silver continues becoming more important to the modern economy every year. The relationship between Canada and the United States adds another interesting dimension. The two countries maintain one of the largest trading partnerships in the world. Manufacturing supply chains extend across both borders. Mining, investment, energy, infrastructure, technology, development, and industrial production remain deeply connected. Any significant policy shift involving strategic minerals naturally attracts attention from businesses, investors, and policymakers on both sides of the border. Whether this latest development ultimately changes silver prices immediately remains uncertain. Markets rarely move because of one single event. Instead, they respond when multiple supportive trends begin reinforcing one another. Today, those trends include expanding industrial demand, evolving monetary policy, persistent inflation, concerns, strategic mining investment, technological innovation, and growing awareness of supply chain security. Taken together, they create one of the most interesting environments the silver market has experienced in years. That does not guarantee an immediate rally. It does suggest that silver may remain one of the most closely watched commodities moving forward. Investors who continue following these long-term developments, rather than reacting emotionally to every daily headline, may find themselves better prepared for whatever comes next. One thing is becoming increasingly difficult to ignore. The global race for critical minerals has already begun. Silver has become one of the most important resources supporting the technologies of tomorrow. Governments know it, manufacturers know it, institutional investors know it. The only remaining question is when the broader market fully recognizes just how valuable reliable silver supply could become in the years ahead. That is exactly why today's developments deserve far more attention than many people realize. If you enjoyed this analysis, make sure you like this video, subscribe to Silver and Gold Watch, and turn on notifications so you never miss our latest updates on gold, silver, inflation, the Federal Reserve, and the biggest stories shaping global financial markets. Thank you for watching, and I will see you in the next video.